Welcome everybody. We've got half an hour to sort of talk through the UK healthcare market. Very fortunate to be joined by two highly experienced operators in the UK care home sector, aged care. And really what I'd like to do over the next 25 minutes or so is explore how the last 3 months has impacted their businesses. Both are involved in operations and development and investment around the sector. In a minute, I'll ask Mike and then Danny to introduce themselves. And then we're going to run through what the impact of COVID has looked like, but more importantly, what impact do Mike and Danny believe that's going to have on the UK aged care senior living market looking forward? How is that likely to impact real estate? How is that likely to impact investment? So can we kick off? Danny, actually, you're top of my screen. So could you just give us a brief introduction to who you are and your organisation, and then we'll ask Mike to do the same.
Sure. I'm a senior advisor and operating partner at Patron Capital and co-founder of the Hambly Group. Patron is a private equity real estate fund. It manages approximately 4 billion euros of equity, invests across Western Europe in direct real estate and operational real estate businesses, including leisure, hotels and healthcare. Since 2010, we've committed over £250 million of equity to the healthcare strategy. Our first investment was setting up Gracewell Healthcare, which was a development-led elderly care provider. We grew that business quickly, exited to Welltower, a US healthcare REIT, and Sunrise Senior Living in 2014. Our next investment was the acquisition of a neuro rehabilitation and complex care business called Badley Park, which again we grew over 5 years and exited that to Elysium Healthcare in 2017. And following the sale of Gracewell, we established the Hambly Group, which today comprises of Hambly Development, which is one of the leading care home developers in the UK today, and Hambly Care Homes, its sister operating company. Over the last 5 years, we've developed more than 15 care homes. We've acquired 8. We're currently on site with 4, and we've got a pipeline of another 20 projects, which we're going to be delivering over the next 2 to 3 years. Hambly Care Homes currently operates 10 elderly care homes focused on the private pay market and 1 neuro rehabilitation facility operating under our Inspire Neurocare brand.
Brilliant. Danny, thank you very much for that comprehensive and succinct. Mike, could you do the same so that the audience knows who you are?
Of course. I went to work in a family care home in 2004. I learned pretty much from the ground up. So, giving personal care, meds rounds, how to design and process rotas. It probably wasn't what I envisaged doing at 21, but it built a good grounding and a good understanding of operationally how a care home works. That was in partnership with my aunt, who'd been a really senior, high-ranking nurse. We built a little group of 3 homes and then exited in 2014. In 2016, I started another healthcare group with a wealthy family office, and the intention had been to grow the group and exit in year 5 or 6. We created really quickly a good group of 5 homes. We bought them, at good prices. So there was a big capital value increase. EBITDA we increased across the group, and obviously completed a purpose-built development as well. And when we came to exit, family office decided that they liked the cash flow, they liked the return on investment, so they wanted to stay in, and they bought me out in 2019. December 2019 was a busy month, and alongside a REIT, we purchased Tanglewood, which is a group of 6 care homes in Lincolnshire, 390 beds, all purpose-built. And in the same month, we also started Halcyon Care, which was a group sort of based roughly in the southeast of England, Suffolk as well, which was in partnership with L&T, who alongside Hambly are obviously one of the leading developers of care homes. They manage and complete the development. sale and lease that back, and then Halcyon takes over the operation. So at the moment, Halcyon has 2 care homes, one in Hertfordshire, one in Suffolk, with a pipeline of another 2, and Tanglewood is 6 homes in Lincolnshire.
Brilliant. Mike, thank you. So, I mean, what's really interesting about that is that both Hamberley and Halcyon and Tanglewood clearly been through fairly significant growth, some significant operational challenges. Could you just, I guess we have to touch on COVID. It's inevitable. It's been so much in the media in the UK. Danny, start with you from your experience. What really have sort of some of the key experiences of COVID-19 being, just as a brief look back? I don't want to focus too much on the past. I really want to then focus on what does the future look like. But I think it's important to touch on it.
Obviously, this has been a really challenging 3 months for the sector as a whole. We've sadly had COVID cases and COVID deaths in a number of our homes. What was interesting is obviously at the outset, we expected, given the vulnerability of our residents, we thought that if you caught COVID, then you were going to die. And in fact, the overwhelming majority of residents who actually caught the disease have in fact recovered. So we've passed through the peak, and we're now COVID-free in all but 2 of our homes. In terms of the sort of issues and challenges, they've all been very well publicised in the media. Testing has been a major issue. We just couldn't get tests done. Only in the last 4 to 6 weeks have we had all of our residents and staff tested. So we're operating in an environment without knowing who in our homes may have the disease or bringing it in. And then now we've had the results of the test back, we're seeing a lot of residents and staff who have been tested positive and in fact asymptomatic. So that's definitely a need to get that in place. Obviously, staff absenteeism because of them isolating or shielding, or in fact getting the virus and then having to isolate. Fortunately, we haven't had any staff deaths associated with COVID, but the impact has been that we've increased external recruitment to overstaff to compensate for the absenteeism, and we've booked agency staff who we know well, just to ensure we've got continuity of care and to avoid them going into other homes and potentially spreading it. Obviously, we've seen a drop in occupancy associated with COVID and non-COVID deaths, and we've effectively had a stop on admissions for more than 3 months now. So our occupancy has drifted down, and we had to face some tough choices. So we were in fact offered a couple of contracts by the NHS for like 20 beds and 30 beds, and we decided to decline them both. One was for in fact a COVID ward to take a floor of one of our homes, and we just decided we couldn't take the risk of bringing people with COVID into the home. Wouldn't be fair on our residents. And on the other one, the hospital refused to test the people they wanted to bring into the home. Hospital discharges, as you've seen, got a lot of press in the last few days. We had a number of instances where we had residents go into hospital and the hospitals refused to test them before discharging them back to us. So in one case, the hospital discharged them to another care home. In another, we had an argument and they held on to them. And on another occasion, an ambulance turned up at the door of the care home at 7 o'clock in the morning with one of our residents, and not tested. We obviously took them in and we isolated them in the care home for 14 days. Fortunately, on the PPE side, we took action early. We managed to get 3 months supply of PPE without being ripped off. We saw, a lot of people were having to pay exorbitant prices for that. So I think locking down fast and early was something which we did. We got a number of complaints from residents' families for the first few days, after which they understood what we were doing and thanked us. So the impact.
So some fairly significant impacts. Mike, how does what Danny has just said sort of correspond or conflict with your experience?
Yeah, I think experience that we remain COVID free in all but one of the 6 homes. and I don't think we really did anything particularly different to anybody else. People in the area with COVID, the chances of that coming into the care home are, rise significantly. My experience in that one home was pretty much start. We felt that anybody who contracted COVID away, and that didn't prove to be true. I think our occupancy at Tanglewood dipped from 94 down to that is already recovered 54. So I think from our point of view, we're perhaps in, has been said to me, we're perhaps in a little bit of a bubble, in that COVID didn't actually have too great. In the Halcyon homes, was that they were, clearly built care homes. Homes was very much easier, and also the fact that they were only opened in December and March meant we did have space to isolate people. We didn't have any cases in either. And so, yeah, as I say, I think our experience not been as heavy as others in relation to COVID.
Yeah, I mean, definitely, we definitely saw a correlation of the incidence of cases in the locations of my homes. So in London, where there was obviously, which was the hardest hit first, my home in London had a higher rate of incidence. So
how do you both feel about the role of real estate? I mean, clearly we're here to talk about real estate, which we will, but have you found that there have been implications of operating purpose-built care homes on your ability to control infection? Because to me that seems important as we look forward. What role is real estate going to play, and actually how can we influence? Mike, you touched on it. I mean, you operate out of purpose-built homes. Some are newer than others. Danny, you're effectively entirely modern purpose-built. Mike, what do you think about that?
Yeah, I think even our views that, I don't think we would, we certainly wouldn't look at any elderly care development unless it was modern purpose-built. I think that there's the moral issue in that. I think in today's world should have their own bathroom and should have facilities that we're offering. And I think in terms of, say, to COVID, very clear correlation between purpose-built accommodation and the ability to not to coming into the building, it spreads in once it's into the building. So I think in purpose-built are generally bigger. There's more there's more meterage per person, which may, when you've got Wi-Fi throughout the building, when they've got communal space that only one or two people can fit in, clearly that brings a big advantage. Basic things like modern windows allow air to circulate around, and again restrict spread of infection, or certainly reduce the chance of that. I think the other that is certainly the role that technology plays and the ability to run that in new buildings. So for us, the computerized care plans, computerized meds, care homes, clocking in, clocking out, all of those systems to effectively run the business without there being much interruption. Yes, there is a role to play with senior management attendants, but from my point of view, we're an extension. We are pretty much data analysts that look at data from the care home every day, falls, meds, whatever that may be. And I think that technology sits hand in hand with that.
Danny, is that something you concur with? You think?
Yeah, I concur with everything that Mike says. I mean, interestingly, we'd had the lowest number of cases in our newest built homes. So it's impossible to be sure that that's a factor, but the ability to optimize infection control within the home is obviously critical. Just bearing in mind that only 25% of care home beds have an ensuite wet room, which means 75% of care residents in the UK have to share a bathroom or a shower with up to 8 other residents.
Yeah.
So, and it's hard to see how that's really sustainable going forward. And you've got 25% don't even have ensuite toilet and basin. So you're going to see obsolescence.
Yeah. I mean, how do you think, from your own business perspective, this is going to impact either the sorts of assets which you develop or the sorts of assets which you will buy in the future? Danny, are you already thinking about design and specification?
Yeah, I mean, we've already started to look at that, and just because obviously we've got a number of homes which are under construction right now, and just looking at things which we can do to perhaps modify the design there with these types of increased injection control, these types of diseases in mind in the future, and obviously the ability to isolate residents and sort of potentially create like isolation suites within the home going forward. Visitation is a major issue because obviously we've locked down the home. Families have been unable to come and visit their residents for the last 3 months, which is obviously traumatic for families, especially where they're extremely worried. And so, we're putting up gazebos and looking at things to include or not in the existing homes to facilitate visitation, but thinking about incorporating visitation suites to enable visitation even through periods like this. Obviously, hand washing stations. We've introduced UV light boxes to optimize training for hand washing and hand hygiene, and looking at washing stations, introducing those throughout the home. So, and obviously, if you're going to be isolated within your room, then you need to make sure that there's enough space for you to be able to dine in your own bedroom. So, all of these things in terms of the space, being able to live, in an environment where you may be facing a situation like this, where people can control the spread of infection.
Yeah.
And distance themselves.
Yeah, I mean, Mike, you sort of touched at the beginning that you've been sort of taken an entrepreneurial approach to business growth. You've acquired assets and you've developed them. How is COVID going to impact on your strategy looking forward, taking on some of the things Danny's just talked about?
Yeah, I mean, I think we, as part of the Tangle Group, we've obviously built a pipeline of 4 new homes in the next 18, 24 months. And clearly, I think we're, looking at those designs again and looking what changes we might make just to deal with COVID. I think that those, what hadn't see are now selling points in terms of the corridors, as I say, modern window, smaller breakout areas. You can control that environment a little bit more. So yeah, I think COVID has changed our looking to achieve. I think it's just a consideration to constantly review how and prevent an infection coming into the home.
Yeah, thanks, Mike. And that I think sort of brings me on to another area that I'd like to explore. I mean, obviously the care home sector over the past 3 or 4 years has been incredibly hot as an investment sector in the UK. We've seen capital values rise, we've seen yields compressed. How are you thinking within your businesses about freehold or leasehold models? Mike, do you want to start on that, and then Danny share views afterwards? Mike, is that something that you've really thought about?
Yeah, I think it's all we've thought about. So I think got a model. I personally, from an operation background, have a lot of. We really are only focusing on the opco model. So from a prime example, actions are taking place. So I think if I go, we acquired 6 homes. There's probably 2 weak assets in that I think we will dispose of. We've then secured a pipeline of 4 homes over the next 18 months, 24 months. So I think we'll look at, at the moment, EBITDA before rent is at about 6.5 million across those 6 homes. I think after rent, that's, after rent and head office, to £2 million EBITDA. With the four new sites on board, we would be looking to increase EBITDA to around 6 million. Of sort of 7 and 8 for OpCo are more than achievable, and I think that's pretty much what our model has been built on. As I think I was saying before there was an issue with the mic, like we may be a little bit biased with, for me, PropCo, but for someone who has value just because it's a building, I understand, but the value is in the operator. If the operator fails, then the 12 to 24 months of sorting that out and the reputational damage has reduced the value of that investment. So I think if you're comfortable with PropCo, by association, you almost have to be comfortable with OpCo, because clearly the vast majority is attached to that. So for us, we have a very specific model in terms of growing that. I think there's room in that OpCo to do your own developments, but I think the ultimate goal would be to increase the quality of and then look to exit and dispose of OpCo as well.
So just to sort of, I guess, summarise that, what you're saying is the strategy is to create a high quality, purpose-built portfolio, but it's asset light. And it's interesting that you're talking about an EBITDA margin, sort of in the 25 to 30% region in some of those areas of the UK that are not necessarily focused on entirely private pay. Danny, what's your take on the same question? I guess is that something you've really thought about?
Yeah, I mean, we own almost all of our real estate, but we have done a couple of sale and leasebacks in the sector. For us, it's an opportunity to recycle capital into the program, and we do believe in the value of the OpCo. Obviously, the number of publicly traded goes in continental Europe trading at relatively high multiples. There have been a number of OpCo transactions, so we definitely see the merits of building up the OpCo, and it is something we're considering in terms of the business plan for our business. But obviously, we have maximum optionality by controlling the PropCo and the OpCo, and the universe of investors is obviously wider than controlling the PropCo.
Picking up on that final point there, Danny, about investors, the market was extremely hot. All sorts of investors looking at, what's perceived as a pretty safe and robust market. And my take over the last 3 months would be, care homes have remained open. They've been challenged operationally, but, good providers have managed to manage cash flow well. What's your view looking forward in terms of, how you're seeing investment into the UK elderly care market? And then maybe same question to Mike after that.
Yeah, I mean, I think we're going to see a reassessment of the merits of all real estate asset classes. We've obviously seen the total shutdown of hospitality, leisure, hotels, retail, and the homes have continued to do it. We had a tough time, but I think you start to perceive this sector as being more akin to infrastructure in terms of the needs of the sector. It's obviously, and I think you will start to see the re-rating, I think, of these assets. And we've got the fear factor right now to overcome, because it has been focused on all the negative aspects of the sector. And if you go into a care home, it's not safe, to stay out. But this is really a needs-driven choice. Over 50% of residents come straight out of hospital. By delivering, we deliver dementia nursing as well as residential care. So, I mean, I think we will start to see some reallocation. But, I mean, we had a credit approval from one of our lenders last week. So, give you an indication, and in this market, the banks and investors are going to want to be investing in best-in-class assets. So,
yeah. Mike, to your point, you said it's about the operations, and I don't think anyone can disagree with that. Pursuing an OpCo model must mean that you're having conversations with real estate investors. Is that something that has continued through COVID? Do you see that continuing, to Danny's point about the long-term secure income streams from care?
Yeah, I mean, I think, I don't think Danny could have put it any better than saying, we see it being upgraded to sort of infrastructure level. I think from our point of view, we look at it really simplistically in that, I noticed you said a couple of times that the sector is, had been really hot and has perhaps cooled down a little bit. I think for us, but retail, leisure, the industry certainly looks a lot more attractive than that. So for us, we're sourcing finance at the moment. We haven't seen a dip in that. We're still being able to source that, and I think probably what is shining through is that inquiries have pretty much reached back to pre-COVID levels. So I think that's probably an indication that I think by the end of the year we would certainly have expected to return to normalised levels.
That's fantastic. I mean, that is encouraging to hear. I think that certainly corresponds with what we are beginning to pick up, and it seems to have happened very quickly in the last week or two that inquiries have restarted. Danny, is that something you're seeing?
Yeah, I mean,
Hambley Group?
Yeah, I'm happy to say we had our first 2 admissions after 3 months on Monday. So yeah, we are having, because we basically refused admissions. So we sort of, any inquiries coming in, it was just, we're not open. So now we're ramping up our marketing and we are open, and obviously managing that safely, and obviously not just publicizing marketing that we have 3 care homes. We're also safe, and that's going to be an important factor in how we develop our business going forward.
And that's probably the best place to leave it, Danny, to be honest. On behalf of CBRE, on behalf of Bench, many thanks, Danny, and to Mike for giving up your time, for being so open and honest, and thank you very much. So we'll close the session there. Thank you.
Thanks, Tom. Thanks, Mike.
Thanks, James.
Thanks,
Bye-bye.